Good afternoon. I'm Josh Lipsky, the director of the Geoeconomics Center at the Atlantic Council. Thank you all for being with us today, both in the US and around the world. We're very excited to be hosting this event, talking about two generations, economic crisis and recovery. We have a fantastic panel we're going to get to in a moment. And today we get to launch a paper by Senior Fellow Dr. Nicole Goldin. You can find it now in the chat on this exact topic, something we've been talking about for a long time in our center. And we're so happy that Nicole, Senior Fellow, has delivered this paper and we get to have this conversation today. It's an issue we care deeply about because no country, the US or any other country, can be strong abroad while fractures build at home. But one of the fractures that is most misunderstood and frankly not studied enough is intergenerational inequality. And that's the subject of today's event. And as you'll see in discussion in Nicole's paper, what we try to do on this issue is take a step back and not just think about the global financial crisis and isolation and what it did to younger people and older people and their economic prospects, and not just look at the COVID crisis and the pandemic and the economic shock felt around the world, but think of it instead as an arc, as a 10-year long, 12-year long economic journey, a difficult journey that so many people have been on. And just to give you an example of what that means, imagine someone graduated from college in 2007 and 2008. Studies show that they will have lower lifelong earnings than their peers who graduated both before and after. Now that same person might be in their mid-30s, about to enter their peak earning years, and the COVID crisis hits, 2020. So when we think about those sort of dynamics over 12 years, we haven't fully appreciated the lifelong impacts these twin crises can have on people. And the same goes on the other end of the demographic scale. People in their 50s, the original shock, and now 65, beginning retirement. That, both in the US and around the world, the consequences of that are only beginning to be understood. So that's our focus today, intergenerational inequality. And I'm so glad that everyone's joined us for this conversation. We want to hear your questions. Please submit them in the chat. Please join this conversation. And I'm very honored that to lead us through the conversation today, we have with us Raj Kumar, President and Editor-in-Chief of DevEx. Raj, thank you again for being with us at the Atlantic Council, and over to you.
Thanks so much, Josh. It's great to be with all of you. Great to be at the Atlantic Council, at least virtually, and to be here with so many friends on what I think is a pretty fascinating topic. As we've gone through this pandemic, we're kind of peeling back the layers of our own learning, right, about the impact of this pandemic and all the economic crises. And I think this session hopefully will help to peel yet a further layer. And I think we're all going to come away with some ideas of what we can actually do. So let me just first tell you who's with us. I'm really honored to get to moderate this conversation with Nicole Goldin, Roberta Gatti, and Arturo Franco. I'll just say a word about each. Nicole is a non-resident senior fellow here at the Atlantic Council in the Geoeconomics Center, and she's also the global head of inclusive economic growth at Apt Associates. She has worked on these issues for a really long time. I think you wrote, Nicole, the first youth policy at USAID many moons ago when we first got to know each other, and you've been working on these topics for a long, long time. Arturo Franco is with us. He's the Senior Vice President at Mastercard Center for Inclusive Growth. So you're working on these issues every day, Arturo, in that center. You formerly were with McKinsey and you were in government in Mexico in the state of Nuevo León. So interested to get your perspectives as someone who served in government in the past. And Dr. Roberta Gatti is the Chief Economist for the Middle East and North Africa at the World Bank. And again, studies these issues every day. So Nicole, I want to start with you because you've got the paper out. What does the paper say? What is the thing that we're all kind of missing in the way we talk about it, and sort of the narrative around the economic crises since 2008 to now? And maybe most importantly, what is the sort of joke embedded in the title of this session? What are we missing if we haven't caught on to that yet?
Great. Thanks so much, Raj, for leading this conversation, Atlantic Council, for helping push this paper through, and really thrilled that Roberta and Arturo are also able to be part of this conversation. I'm very much looking forward to all of your thoughts and reactions. This is a community project, so we want to get all the best ideas weighed in. So I'll go with the last part first about the title, and just hit on really why we thought this paper was important. And Josh introduced this idea that we know from economic history sort of two really main things that converge in this paper. One is that population structure influences economic growth. I'm sure we'll get to talk a little bit more about these ideas of the demographic dividend, very, very true for Roberta's region right now, as well as the idea of the second demographic dividend that can come from older generations, and hopefully we'll get to talk more about that. But we also know, as Josh introduced, that economic shocks do not hit all people equally. And I think the fallout from these twin crises demonstrates the convergence of these two realities. Both of these crises disproportionately hit younger and older people and exacerbated the inequalities that kind of fall along generational lines, but also importantly, exacerbated the inequalities around gender, around race and geography, and those linkages between age and generation and gender and geography and all of those issues are also, I think, a nuance that I hope we'll get to kind of unpack a little bit more as part of the paper. And there really are just these broader ramifications for economic progress. And as we move from response to recovery to rebuilding with a focus on what's happening out of this crisis, we did think it was important, as Josh said, to bring in that arc and to landscape and surface some of the broader issues and investment ideas moving forward. I think in reference to the title of this event, which some of you may have gathered initially, talking about two generations. So one of my favorite bands, The Who, coming out of our maybe older generation of as part of this conversation, launched their kind of landmark album My Generation in 1965, I believe it first came out. And many of you may also know there was a remake by, as Arturo reminded us, Justin Bieber, so talking about representing our sort of younger generation. So we wanted to kind of bring that forward as kind of an overall theme to make sure that we are kind of recognizing and thinking about how these crises impacted both these generations, and kind of squeezing everyone in between as well. So I'm Generation X, right? So I'm kind of sitting in between both these generations and sort of thinking about what's happening. And just very quickly, and then we'll kick it back to the conversation, we really wanted to surface this couple of key dynamics. So one is this idea of population age structure, what's happening with this first and second demographic dividend, really looking at these key issues of job loss and business closures. And suffice to say, I think one thing that's really key and that hopefully comes out in the paper is several of these themes are similar to both generations, but they impact them differently, right? So the job losses, the business closures kind of affected young people more from a wage work and employment perspective, whereas the older generation tends to be hit from the fact that they own so many of the small, medium-sized enterprises, and the business lockdown shuttered so many of those doors. So that's an example of how that trajectory differs. We're looking at the issues related to the earning and training disruptions, which maybe in the shorter term had a more immediate reaction, impact on young people, right, in terms of their learning, their more immediate economic and earning potential. But we, of course, know, especially in multi-generational households, that impact is felt throughout the household and then in aggregate into the entire economy. Savings and wealth accumulation, right? We know, for example, that older people, especially minority seniors, suffer a lot of declines in net wealth during economic shocks. And there was some interesting data that came out, for example, in the aftermath of the 2008 crises by the OECD, that showed that pension assets dropped by almost 5 trillion during the financial recession. So we know that is a major issue for older people, but we also know that young people face a lot of issues as it relates to wealth accumulation. For example, the housing crisis, right? Buying a house is such a major feature, a bedrock of wealth accumulation for young people, many places around the world. And we saw that rising house prices combined with, credit restraints made that much more difficult. And of course, the digital issues and digital transformation. Maybe this is one that's more unique to the COVID versus the 2008 crisis, where we saw really that just rapid digital transformation and an increasing reliance on digital tools, digital platform, whether it's for learning, whether it's for work, where the lack of access, the lack of skills, the lack of capacity, really, I think, shown through in one's ability to kind of survive or thrive and kind of come out of this crisis. So those are just some of the dynamics. Hopefully we'll get to talk a lot more about.
Yeah, let's dive into those. I think
happening.
You set the table well, Nicole. And to me, one of the big themes of this pandemic period is, remember at the very beginning when we thought the pandemic was going to be a great equalizer, right? That was the language for a month or so. Everyone's going to be affected, every country in the world, rich or poor, you're hit by this pandemic. And then very quickly we saw that was basically a lie, right? And the reality on the ground was inequality kind of drove the outcomes. And this is one lens on that same question of inequality, right? That not everybody is going to react to an economic crisis in the same way. A lot depends on where you're starting from or your place in life and maybe your generation. So I think in this conversation, what we want to do, and those of you who are following along, I invite you to be a part of it by sharing questions and thoughts in the chat function here and the Q&A function. What we want to think about is, well, what should policymakers do differently, right? What are some of the implications? Now, if our eyes are open reading this paper to the different outcomes, the different ways people in different generations experience this crisis, what do you do differently? And maybe I can bring Roberta and Arturo into the conversation as well. But Nicole, just starting with you for a moment on this, one of the main tools policymakers had during this pandemic was to say, let's just put money in the hands of people, right? Knowing what you now know, having done this research on the generational question, what would you advise governments to do differently rather than just put money in the hands of people who need it?
It's a great point. It's a great question. And I think whether it's money and whether it's other kinds of support, I think one of the main things that we saw, and I should say we're starting to, again, learn more about the impacts of these different policies and what worked and what didn't. But I think one of the things that we saw that worked but was also missing was the level of targeting, right? So it's this idea that there can be, general support, cash in the hands of pockets, but was that support, whether it's money, whether it was another kind of, policy, subsidized access, being targeted directly to youth or to older people. And we didn't necessarily see that as much. We did see it in a few limited examples. So a couple raised in the paper, for example, where it comes to seniors and pensions, right, which is a way that is more directly gets into their hands. We saw, for example, Ukraine increased, their pensions on a kind of one-off basis. Mexico front-loaded some of their old age and even some of their disability pension payments to make sure that they were being reached to the older population. We saw that a little bit less when it comes to young people, but we did see it in some cases, and some examples for in the US and the UK included maybe slightly more indirect, but supplemental insurance for gig workers, right, or self-employed, which might be more leaning towards young people. Canada, for example, had a novel benefit for students. And so while not all students are young, many are. And so that might be a slightly more indirect but targeted approach. So I think that was one of the things that we saw, but we need to see more of, is that targeting and the specific ways in which the money's getting to the hands of young people and older people who may just not be as in the mainstream and in the direct channels as some of the interventions and some of the mechanisms.
Let's get into that question of targeting. Maybe Roberta, you could jump in. The region you focus on has high degrees of youth unemployment, particularly among women. What have you seen across Middle East and North Africa in response to the economic crisis of the pandemic that targets those groups, or what opportunities, what's worked, maybe what's been missed? And you've got your mute on, by the way.
And now I'm unmuted, but first of all, thank you for the question, but there are so many layers to it. So just to give you a sense of where the Middle East and North Africa stands, and I'm talking going from Morocco all the way to Lebanon, at least that's the definition of the World Bank. So youth unemployment for male is 33%. For female is 33% and for male is 22%, and it's twice as high as adults. We could have a separate conversation for why in some countries we see higher unemployment for young people than for older workers. But something that is very unique to the MENA region is the fact that unemployment is high, and in some countries it is very high for the highly educated. So for those who can actually afford to stay unemployed. But what is dramatically unique is the low female labor force participation. So only 1 out of 4 women participate into the labor market. Now, add COVID to this. And what's happening? Well, I can only give you partial answers because the MENA region is a region where data come infrequently and are not easy to access. And that we could have a separate conversation also on that, and I would love it, because if I were to answer your question, one of the things that countries should do differently is to measure more, measure better, and make their data available to people. One of the things that I saw, and I don't want to veer too much out of the question of labor markets, is that data save lives. I mean, we, in a country like the United States or in Italy, where I'm located at the moment, if we know that there is a high incidence of COVID in some places, we can decide as individuals to restrain our mobility, to make sure that we wear a mask that is highly protective. In a country that does not collect this type of data, that does not make it public, you cannot even protect yourself. Now, this is a very extreme, although very important case, but one of the things that I would say, I would answer to your question of what should country do differently, definitely measure better. If we go back to the question of women and female labor force participation, starting from a very low base, what happened with COVID is that it even turned out that MENA was not different from other regions. Women were most impacted. And one of the channels of impact is the need for care, need for the care of the elderly and need for care of children. So something that I see going around, and that is, I see it with joy, and I hope it will continue to expand and be measured, be evaluated, is to make care more available, of better quality, childcare particularly, and more affordable for women. So this is a known barrier for female labor force participation, which interacts not only with the affordability and so with inequalities that both of you have talked about in the socioeconomic spectrum, but also that interacts with social norms. It takes a lot for a mother to let go of a child in the care of someone else, unless that care is of high quality. And the whole infrastructure to make that care of high quality needs to be built from the regulatory side, from the training side, from the infrastructure side. So that's something that I'm starting to see in the region, and I'm particularly rejoiced by.
And that's a good example maybe of targeting, right? To exactly this point, if we
Correct.
know this is a particular challenge with this population, a government might say, let's support childcare early in a crisis, knowing that might help this part of the labor force to bounce back and to grow. Arturo, when I think about targeting, the kind of work you do around inclusive finance comes to mind, because if we were having this discussion 20 years ago, our tools to address targeting would be much more blunt. And back then, people would say, well, if you try to target, you might actually end up going so slowly in your response that you miss the crisis period. But now we do have tools, right? We can identify people, we can put money directly into digital wallets, based on certain criteria. We can see how people spend that money. Tell me, where is the latest state-of-the-art thinking around inclusive finance and how it connects to this theme that we're discussing today around targeting?
Yeah, very, very happy to, Raj. Let me start just by congratulating Nicole. I think it's a very compelling and a very insightful way to assess this observation that the two edges of the demographic pyramid or the age distribution were both the most vulnerable, but for completely different reasons, almost diametrically opposed reasons. One, kind of heavily indexed on digital skills, but with job insecurity. The other more vulnerable from the health perspective, even though they have more experience and perhaps less access to these digital skills that you mentioned in the report. I think at Mastercard, we have been focusing on the issue of inequality for 6-7 years and the issue of financial inclusion for about 10 years. So we were not though we were not part of the group that thought that this was going to be a very equal recovery, we actually put a lot of resources to work to make sure that it was not a repetition of 2008 or other events, shocks that have led to inequities. We've been before the pandemic working in our research with Bruegel in Brussels in our Future of Work initiative there. We knew that youth unemployment in the EU was 3 times higher than among those in over 55 years old. So we had already emphasized that aspect. The pandemic erased a decade of progress in leveling the youth of Europe. And so to answer your direct question, we take a very data-driven approach to our work. We made a $500 million commitment to reducing the racial gap in the United States, a project called In Solidarity. And we're using all of the data tools that we can find, some of them that we've invested in, to find exactly those places in the United States where we can expand access to financial services and credit using CDFIs or community banks. So very, very data-driven approach there. We just launched a small business initiative, a partnership with Caribou Digital called the Strive Community that will equip 5 million small businesses with tools to digitize and to grow. And again, we are targeting the places and the segments of the kind of small business community where we can get the biggest bang for the buck. So I think in general, what I would say is averages are the enemy of progress. We have been relying for too long on top-down, GDP type metrics that make everyone feel really good. And we just do not see who's being left behind. And I think this type of approach where you highlight these two generations can be quite informative for the work that we do, particularly as the report shows when large parts of the small business owners are baby boomers in the US, or where a large part of the people suffering from job inequality or bad quality jobs are the youth. So very happy to see this research.
Arturo, just staying with you for a second, I mentioned before you were in state government in Nuevo León in Mexico. And if you think about Latin America as a region, one of the features of it is high degrees of informal workers, right? More than half the workforce are informal. How does this issue of generational lens connect with this question of informality of the workforce? Because I would think, maybe it's the younger workers who tend to be more informal, entry level, and maybe older ones who run, small mom and pop kind of businesses. Where is their connection point, if at all, to you and to anyone else here who wants to jump in on that theme?
Yeah, very happy to. This was 5 or 6 years ago, but I will highlight 2 experiences that I think connect pretty well. At first, I served as Undersecretary for Strategic Priorities, basically the governor's unit for delivery of big things. And out of the 7 strategic priorities for that administration, 1 had to do with what the report calls NEETs. In Mexico, we call them ninis, the young people who neither study nor work and are kind of prone to getting in trouble, getting into drug cartels or other kinds of things. And the second one was giving every senior person a pension. And so 2 out of the 7 strategic projects of that government had to do with the 2 edges of the age distribution. But then we created a public-private partnership called Consejo Nuevo León, which is I think a really interesting experience, a long-term planning commission that is constitutionally mandated to produce a vision for the state that goes beyond several administrations, where the government is legally bound to respond to the recommendations, and the unit is financed by the public sector and the private sector and has a completely independent board, almost like an academic board. And the one idea that I would rescue from the work that we did, we created a 2030 vision, now it's being revised to a 2040 vision, is policy continuity. I think that is like gold in policy making. Like great ideas die every 6 years when a new governor gets elected. The second is this idea of the second demographic dividend. I love the fact that the report doesn't talk about multi-generational views where you just kind of acknowledge that there are multi-generations out there, but intergenerational, right, which takes you to the interdependence between two or more generations. And I've always thought that there's a big lost opportunity in combining the competitive advantages of youth and the seniors, right? The seniors have experience and time. The youth has energy and less experience. And so one of the projects that we created in this long-term planning agency was a way using technology to match mentors, to put basically the seniors back to work in supporting the youth. And I think that that could be a great thing to discuss and maybe to pursue.
Yeah, that sounds like a great model. I think, Roberta, you might have wanted to jump in on this question. Go ahead.
I wanted to come in. First of all, Arturo, I think you and I could chat for like ever, because this is super interesting. Your experience is super interesting. One thing that I was noticing as you were talking, Raj, about targeting is that at the beginning of the crisis, targeting was less of a concern. I felt that, and everyone felt that it was more costly to exclude people rather than include people who might not have needed the support, but were getting it anyway. So in that sense, when you were talking about what our government doing differently now, is that they're moving from disaster relief, which was like, we just need to help people. And even if we make errors of inclusion, if you pardon the nerdiness, that's okay, to a moment where targeting needs to become much more purposeful, much more laser done, because now countries are building up debt. And one of the things that is happening on the macro side that we should not forget when we think about inequality, youth, intergenerational interdependence, is that debt is essentially borrowing from future generations. And there's been, in the past year, the highest increase in debt in the past, I think, more than 100 years, more than in World War II, more than in 2007 crisis. So now targeting becomes more important. And what Arturo was saying in terms of being data-driven is fundamental. And how you go about it, it matters, the context matters. Do you want to target women and think that what you need to target is the constraint that you want to slack? And I don't know how to say it in a more friendly way, but the problem that you want to solve and the people who are affected by that problem. If the constraint for women is childcare, then you should really think about childcare for those women in those specific contexts. Arturo also spoke about something super important, and so did you, Raj, which is informality. I think that informal workers have been the hardest to target, the hardest to help. Like, how do you get to them? They're not registered anyway. They are the most heterogeneous bunch that you can think. They're self-employed. They work in micro enterprises. They work one day yes and three no. They used to work in markets, and market disappeared because everybody had to protect themselves from COVID. So there is a sense in which you need to be data-driven and you need to be very thoughtful about these inequalities that are out there. And, they might be the 1% in the US, but they are the 75% in the world. 75% of the workforce in the world is informal. So that's what we
exactly. And that's why I think there's such an opportunity around using new systems, digital finance systems, to get money to people, regardless of whether they're registered as a formal employee with payroll, in the system.
And if I may, Raj, sorry, you got me too enthusiastic about this. You said, what is another thing? I know, Nicole is like, no. I know her. Yeah, sorry. Was to really think about a new generation of social protection, which is to decouple work status from social security, health insurance, and pension insurance. Let me leave it at that to see
it's an important point, and it's something we've covered recently at DevEx about Latin America, right? Where so much of the social protection system is connected: pensions if you're a formal employee, healthcare if you're a formal employee, all kinds of other benefits that you get, and taxation for formal employees. So yeah, this issue of informality is key when you think, I think about generations. Nicole, your take on this, and I want to bring in, we've got some great questions that are starting to filter in here. And I thought I might pose one to you around student loan debt, because, you know, Roberta mentioned thinking about debt as really borrowing from the future generations. Well, there's two ways to borrow. One is, you know, putting it on the government's balance sheet, which eventually future taxpayers will pay for. But another is putting it a lot on the individual youth. It's saying to finance your education, you've got to take on a lot of personal debt yourself. It's obviously different in different countries, but we got a question to that point, Nicole. Maybe you can address it along with whatever other thoughts you have at this point in the discussion.
Great, thank you. There's so much to say. Just very quickly on some of the things that came up, you know, couldn't agree more on the point about data. And just the one thing I'll add on to that, which I mentioned in the paper, is age disaggregated data, right? That really is key, and we don't have enough of it. We're starting to see more and more. Raj, you mentioned in the introduction kindly, the USAID First Ever Youth Policy, the Global Youth Wellbeing Index I had done. And, you know, we continue to see data gaps, and especially, again, that age disaggregation, and then the gender age nexus, right, for example. So that's just very much aligned to the targeting. If you don't have that breakdown, even to say, you know, 25 and over, right? You might have, you know, under 15 to 24, and then 25 and over. Well, that's not super helpful in terms of really breaking down who needs what, when, and what's working for whom.
Well, and in some countries, I'm thinking about Nigeria, even if you're 40 years old, you're considered youth, right? So
exactly.
Really disaggregating the data is important in many contexts.
Exactly. And then in some contexts, you're considered, if you're 45, you might be, you know, considered an older person or a senior, where there's lower life expectancy. So that's exactly it. We also need to, you know, kind of get beyond our social structures around, you know, youth, seniors, which is one of the reasons we were particular about sort of using younger and older persons, right? Because we know that sort of youth and senior can vary. But also, just very quickly, one thing that I didn't get as deep into the paper on, but since we're talking about informality, and it is really important, is the agriculture sector, right? And because I think not necessarily an informal sector, but ag is really important in so many economies as we're thinking about the way forward. And I think so much of what we do talk about in the paper, whether it's data, whether it's bringing in technology, whether it's financial inclusion, is all going to be really important in enabling, whether it's young people to be successful kind of agripreneurs, and we're working on some of this at APT, and whether it's in Cambodia or work in Mexico, and sort of competitiveness in the regulatory environment. So we want to think about agriculture as a sector, and also making sure that is as a sector, like care economy, like, you know, green economy going forward, in the digital economy, the gig economy, is something that we're thinking about as both an opportunity and a way to kind of bring youth and older people kind of forward in economic progress. And then lastly, to come back to your point about education, you know, it's a really interesting question. And Raj, you kind of hit on some of the answer right there. Is, you know, outside of the US, where, or maybe, you know, Europe, there isn't as much formal financing available even for education. So not only does it affect the sort of young person themselves that is often taking on debt, they're often getting that funding from within their family, from friends. It's a much more, going back to informality, it's informal financing and sort of informal debt that they're taking on, which, you know, in some ways can be more dangerous. So, I mean, I think it speaks to, you know, some of the things that Arturo was talking about earlier, in just some of the novel ways of financial inclusion. It's increasing the ability of young people to save. So getting more young people, I think, into formal banking and savings, which I know is something, you know, the World Bank obviously works on and tracks with Findex. But it's getting more people into sort of formal savings so that they're able to kind of smooth and have that ability to kind of finance the education. And the other piece I mentioned here is, and again, it's not really, I don't really get into it in the paper, is remittances. There was some really interesting data around how remittances actually rose during the crisis, during this last year. And we know that remittances, one of the kind of key uses beyond day-to-day consumption is to finance education by the young person or the parents. So I think it's an ongoing challenge. I think it's more of an open question than one we have necessarily the answers to. But I think it's a really interesting and important thing to think about is, again, as you said, the macro debt and that sort of debt restructuring and debt forgiveness for individuals.
Now, Arturo, you mentioned before some of the work with small businesses that you do at Mastercard Center for Inclusive Growth. We got a question in from Benson Musabe in Uganda, basically saying in his context, there's a lot of focus on big business, but not so much on small business, and wondering what can be done during a crisis like this to make sure the investments are there for the smallest scale companies that may actually be the ones that employ young people and women in places like Uganda. Do you have a take on that, Arturo, given your work with small businesses?
Yeah, I mean, for many years we have been investigating using data how different kind of responses to shocks. We've been doing it with Leora Clapper at the World Bank with natural disasters, hurricanes in the US and in Puerto Rico and others, how they disproportionately affect larger versus smaller business. And it's no surprise, larger businesses have less of a shock. Larger businesses come back quicker and they gain advantage of these events. And what we've had is a very long natural disaster. This is kind of like a long hurricane, right? That had lasted for almost 2 years. I think technology is part of the solution. I think we have seen tripling of the number of small businesses globally going online. The peak was July 2020. The digitization has persisted in 2021. Between 20 and 30% of these businesses that became e-commerce businesses stayed, and that created $900 billion of additional online shopping, which was a lifeline for many businesses. So technology is not, a silver bullet, but it's part of the solution. I think that on the other hand, creating and incentivizing local economies, we have launched a few projects and partnered with a few projects in the United States that create incentives to buy local, right? And the best friend of a small business is not a guy sitting in another country or a capitalist, sitting at a bank somewhere else. The best friend is the neighbor who's going to come and shop there every day. So we need to work on strengthening our local economies. As I said, we have a target of digitizing 5 million small businesses in the next few years, but we also have a big project with the Financial Access Initiative at NYU with Jonathan Murdoch and Tim Ogden on studying the financial lives of small firms. It's called the Small Firm Diaries. You will see some research come out, and hopefully, Nicole, we will add an age dimension to it to understand if there are different dynamics for younger owners than people that are more senior. So that would be
we got a data outcome from this event already, Nicole. That's not bad. Hey, Roberta,
I love to see it.
Roberta, in your context in MENA, if you've got a third of young people unemployed, and if you think about entrepreneurship, starting a small business as a key way for these young people to find their path forward, what is the constraint for them? You talked about the care economy and the constraint around childcare. Have you identified constraints for young people in these contexts who want to start a business and be an entrepreneur?
Can I be frank?
Please.
Right here.
Please.
So I think that my region, which is an amazing region, by the way, and that really has in its youth an incredible wealth, I think my region is leaving part of that dividend on the table. Because at the moment, the private sector is not as dynamic as it could be. The state continues to have too much of a sort of looming presence in the economy, and not always for the best, in the sense that is too present in some cases. So a lot of large state-owned enterprises who don't compete on the same level playing ground as the private sector, and yet not enough investment on the core public good. And I'm thinking about disease surveillance, really, strong foundational education and so on. So I do believe that youth entrepreneurship is one way out, but is one way out in an economy that to an economist looks like a second best, one where everything could work so much better if the state moved towards a role of steward of the economy rather than a strong controlling presence. So there are many potential barriers if you want to think about youth entrepreneurship. Some have to do with the quality of education, which still needs a lot of improvement. Some might need with, it's difficult for young people to be successful entrepreneurs. And there's a reason why you see a lot of successful entrepreneurs being entrepreneurs in the sort of, in the core of their working years, past 30, because they had that experience before. And the question is not so much the entry level, although, lack of access to capital is a constraint for young people, but it is for these enterprises to grow. So what we see in the region is that at the entry level, we don't see a difference with other region, but we see that once you enter, it's very difficult to grow because the condition for a sort of healthy competition is not there. So in that sense, we can think about it from the supply side, the skills, the education, but we really need to think about a state that empowers the private sector to grow.
And that maybe it's a chicken and egg question, because in part, perhaps the reason for such high youth unemployment is precisely an economy that is more controlled and doesn't allow small businesses to grow, which are, small businesses that are growing are a major source of jobs.
So, this is what we see is an equilibrium situation, which is a low-level equilibrium. It's an equilibrium that is all consistent with each other. Persistent low growth, high level of unemployment, high level of informality, which means tendentially low productivity jobs. A state that has a social contract that was traditionally based on subsidies and public employment. Things are changing quite a bit, and I'm super happy to see more cash transfer, better targeted cash transfers. Some countries are moving towards universal health coverage. They're moving away from subsidies. So it's not all bleak. However, it is overall a low productivity equilibrium, which is very stable and is very difficult to unbolt the countries out of them. So it's true, we observe an equilibrium. I think that if we had a sort of big ignition from the side of a more dynamic private sector, thanks to a government that is less present, but is present in the way it ought to be as a steward, that would work out. So I don't know whether that's the chicken or whether that's the egg, but I think that could be a good impulse to the economy in my region.
Well, and sometimes it's a crisis like this that is that catalyst, right?
That's what I hope.
That forces countries to change their view. So maybe that's
something is happening.
Maybe that's a point we can begin to wrap up our discussion on. I think the point of this session and this paper, Nicole, is really to drive governments to make better policy decisions, right? And to think about these two generations that are maybe sometimes lost, or, as Arturo says, kind of included in the averages, but are lost when we really think specifically about where the needs are. So maybe we can wrap up by just going around and thinking through what are the key takeaways for policymakers here? What would you like policymakers to maybe say or do differently once they've read this paper and attended this session and understand these issues at a deeper level? Nicole, maybe we start with you.
Great, thanks again, and so many great ideas. And I'd say, in answering that, I'd also put out the idea of policymaker as a broad category, right? So from a policymaker perspective, and policy being like a government official, right? We're thinking about a couple of things we talked about: increasing our kind of data and targeting so that the policies and the investments that the government is making is better reaching younger and older people and those in need, and thinking about those the intersectionality, if we will, a term we're all becoming increasingly familiar with. But whether it's young women, older people with disabilities, and so on and so forth, and just thinking of that in a very mindful way. In the paper, I talk about doubling down on digital as a force multiplier for growth, as so critical for both younger and older people, whether it's for learning, whether it's for work, whether it's for e-commerce, whether it's for having better access to government services as a sort of citizen, and being able for government to provide better services to these two generations and others. I think that's really critical. But I also think an important piece from a policymaker relates to the private sector. So from a policy side, it's sort of incentivizing the private sector, whether that's for the way the private sector and business is investing in and playing a role in education and training, not just on the digital side, but in entrepreneurship training, in the way that they do their own supply chains and procurements. So I think there's a big role for private sector, quote, policy making as well as creating those incentives from the public sector and those partnerships between. I think those are going to be critically important going forward. We're seeing that, for example, certainly coming out of the US public sector, whether it's domestically or whether it's what we're seeing coming out of USAID with its new, commitments to local capacity and to, its commitments and its economic reforms going forward, and the kind of programming that it's doing, focusing on young people and youth employment and so on. And so I think it's those kinds of focused commitments to inclusion in all ways and all levels, as well as, again, those incentives and those public-private partnerships in digital and employment and education, training, financial inclusion, agriculture, and some of the other areas we've talked about.
Arturo, I think according to Nicole's classification, you would be a private sector policymaker. So what are your policy takeaways from the session today?
If that is not an oxymoron, I will take the designation.
I'm here to help.
I think from an institutional perspective, first, we do like to talk to the private sector. We think the private sector is a powerful tool to create social impact. And as Mastercard, I think we believe that we can create a more equitable economy, a more sustainable and resilient economy. And part of it has to do with the digital economy. So all of the recommendations on Nicole's report, I would double down on the digital skills, the opportunities of financial services that are targeted and tailored to different demographics, et cetera. And we do that work every day of the week and twice on Sunday. But I think from a more personal perspective, just to end with this, I hope this doesn't start something because we're at the end, but when I was reading Nicole's report, I was taken back to my academic years. I was studying sociology of development at Harvard, and I got into happiness models. And there was this paper by Easterlin, it's probably been refuted 5 times already, that showed that there was a happiness curve that was different between Latin America and developed countries and the United States. So the US happiness curve was an inverted U, where the person was at her happiest in their middle age at 42, 43, while the Latin American one, people were happier when they were young and when they were older. And it led me to think about like the structure of society, the relationship between different generations in a household, in a community. You've got these places in the world where people, like a large proportion of the world lives to more than 80, and they found that it's a community, right? The interaction between youth and old people in Japan or in that island in Greece or whatever, that is kind of like the defining factor. So I'm just thinking, I don't know if that happiness curve has changed, but there's something about a region where you're the happiest when you're a kid and you're the happiest when you're an elder. It means that someone's taking care of you, and that and that you're not, the family is not individualistic, and that the person taking care of you, while they are at the bottom of their happiness curve, they're still doing it, I think, for good reasons. So I would just end with, maybe that's the next click on your research, Nicole, but it's an observation I wanted to make.
Given that I'm in my 40s, Arturo, maybe I should stay in the US and then just migrate to Latin America in a decade or two.
A weird shaped curve, yes.
Roberta, how about you? What's your level of happiness And what's your final thought for this panel?
I don't mean to burst the bubble, but the latest I've seen about the happiness curve is that it was just a U-shaped curve for the world, and the minimum was 47. So again, I don't want to date myself and tell you whether I'm on the way up or on the way down in that curve, but that's how it looked like. And there are many reasons why it might look that way. But when I was thinking about the beautiful paper that Nicole wrote, I actually thought that something that we really cannot forget are the young. So 1.6 billion children have been out of school for anywhere between like half a year and a year. And these are the youth, the working youth in 7 to 10 years. And these children are suffering a sort of generational shock that is going to come to bite very soon in the economy and for them in their lives. And this is a part where the inequality is sort of fanning out dramatically. And think about Raj, I think that, somehow the pandemic said that what was up now is down, what was wrong now is right. We used to say, one thing that we learned about education is that one laptop per child does not work. Guess what? Now the most important thing to be able to be connected to school was to have that connection. So if I were to think about the young, I would not forget foundational education. And if I want to think about older worker, again, not dating where I am in that curve, I also would like to bring in the question of health. So more and more people now are either going through COVID or, they have comorbidities that might put them at risk with COVID. Countries that have been able to extend universal health coverage are countries that are going in the right direction. And to build on a point that you made, Raj, about how to make the best of a crisis, there is a political economy to a crisis. And for example, a country like Morocco now is moving towards, very explicitly and purposefully, towards universal health coverage. And it was at 70%, and it wants to go like 100%. And that's something that really can make a difference for those workers who will have to work for a long time still to make it sustainable for them to have an old age where they are adequately covered. The last thing that I wanted to say, and this is very much a sort of regional perspective, is that all of you have brought up data many, many times over. And I couldn't think of a region where this is more important, both producing, accessing, and researching data. So I'm glad to have such high-level partners to try to bring that agenda forward in my region, because that's going to be my flag in the next couple of years. Thanks.
That's great. That's great to hear. And it's a great point to end on, because I think it connects so well with everything that Nicole and the Atlantic Council are trying to get through with this event, that we've got to pay attention to the nuances, the layers, the individuals, and not just these aggregate figures. It's been a great conversation. Congratulations. Thank you, Roberta Gatti, Arturo Franco, and Nicole Goldin. And we've got Josh Lipsky back with us. Josh, what did you think?
That was fantastic. Raj, thank you for just wonderful moderation and just the exact kind of conversation we were hoping for here. And I'm going to think a lot about what Arturo said about averages and the enemy of progress. I think a lot of truth in that statement. And so Roberta, Arturo, Raj, to you, and of course to Nicole for the paper and your leadership on this issue at the council. Thank you. A kind of note of personal privilege for us at the Atlantic Council Geoeconomic Center. This is our final event of 2021 after 41 events. And I want to thank everyone on our team who works so hard to make these happen, and events and communication staff as well that makes it all seamlessly. We're headed into a year in 2022 where issues like inflation, monetary policy tightening are going to be on the table. And if we forget the conversation that we just had here about these deep inequalities in society and focus on these important macro trends, but only focus on those, we'll be making a huge mistake. So I just want to say, us at the Atlantic Council, what we've done this year is try to focus on these issues, from sanctions and tariffs to digital currency, to our conversation today, to supply chains, to IMF and World Bank, to all the issues we cover at the Geoeconomic Center. We're going to continue to do that in 2022. So we hope everyone stays with us. We wish you all a happy holidays and a wonderful new year.